Do you believe maybe, just maybe, the European markets are a better equity market value than the U.S. right now? Yes or no?
Yes, that Americans need to diversify and follow this reflation trade as it moves around the world. But the next stop is Japan, and we've gone overweight in Japanese equities because we think they're going to be the next economy that really sees that reopening kickstart.
Still, because the Nikkei 225 has also had a very, very strong last 6 to 9 months.
Well, look, all these markets are strong, and when we talk to clients, I think we even have a little bit of a frustration that they're so pinned on where the average is without looking at what is happening to the earnings growth. Now, the United States, which we still like, I mean, it's surprised to the upside on the earnings growth this quarter. We think it's going to be a monster year for earnings growth, and that's brought down that PE ratio from kind of the nosebleed levels that it appeared even 6 months ago.
Yeah, and it's really amazing. I mean, you look at a couple of $1 trillion on the balance sheets of companies in the S&P 500, a couple of $1 trillion sitting in consumer bank accounts around the world, global central banks still providing helicopter money to most of the world. I mean, I don't know if there's been a time in 25 years of doing this, Mark, where I have said it is more difficult to be bearish simply because of the amount of cash sitting around the world. Is that part of your thesis right now, or is it kind of a cherry on top?
Well, look, the elements of support for this market that you described are absolutely part of our thesis. But what I think is so interesting is that we really have not seen the private clients around the world make that rotation into the reflation trade. We still see a lot of investors who are maintaining their stay-at-home stocks, maintaining their exposure to the mega cap tech stocks. And what we're saying is, you know, look a little bit beyond that, rebalance that side of your portfolio more in line with the sector allocations, say in the S&P 500 or other indices, and look below the large indices to some of the smaller caps, to the energy names, to the materials names, to the financials that just haven't rebounded but should do well in this new environment.
Yeah, and your note to clients, I think late last night, said more bluntly, the mega cap tech trade may not be over, but there's not a lot of catalysts out there. Talk to us about why, and also how much you focus on crypto, because it's in the first paragraph of your note. You talk about crypto and its relationship to the mega cap tech stocks. I imagine a couple years ago, Mark, you never thought you'd be talking about Bitcoin in your client equity newsletter. How much does crypto and tech move together and matter together?
Well, it's a great question. First, on the mega cap tech, I think that, you know, what we would say is find those long-term tech themes that you want to stick with. Maybe look to the smaller cap names. Maybe it's around health tech. Maybe it's around fintech. And certainly, because we don't think inflation is going to run away, we do think growth will have its day again. But the valuations are stretched on the mega cap tech. The regulatory environment is not the most positive it's been, and that's why we're looking to other sectors. Now, on crypto, everything we do is in a portfolio asset allocation context because we believe asset allocation is the most important driver of portfolio growth for clients. And in that context, you have to look at crypto. Is it diversifying your portfolio? And what we're finding is that it's actually not that great of a portfolio diversifier. Both the tech and the crypto are a little more linked in the way they trade. And then secondly, you know, if you have an asset that sells off, if the stock market sold off 50% in a week because somebody tweeted, every policymaker in Washington would be working to help the stock market get back on its feet. When that happens with crypto assets, Washington and China are looking at, do we need more regulation? Do we need to take further steps? And that's
Yeah.
not a long-term positive for this asset, which means you have to have it such a small part of your portfolio. For most people, they really just can't spend the time on this portfolio allocation.
Shepard Smith here. Thanks for watching CNBC on YouTube.